we're going to take a look at the ETF Jnug, Direction Shares Trust Daily Junior Gold Miners Leveraged ETF 3 times the volatility of the underlying ETF. This is probably one of the most aggressive ETFs, so caution, beware. This is an aggressive way to trade the gold market. Depending on your conviction, it would pay you 3 times the volatility of the underlying index. So if the underlying index is up 10%, Jnug would produce for you 3 times or more, depending on the volatility for that day for those results. The same thing if the market goes against you. So you need to be aware that this is an instrument for aggressive traders that are looking to capture aggressive moves in the market. With that in mind, let's take a look at Jnug and follow pretty much my last update that I made a couple of weeks ago. We're going to take a look at basically what has happened here. Since the expected bottom that took place basically sometime in around the 28th, if we take a look at the daily chart, the initial expectation was for a bottom to come in around the 28th of the month, 15th to the 28th, and in fact we did see the market rebound on the 25th all the way up to about the 29th. Before, and this is very interesting observation on the open interest, that the open interest shot up approximately 2,500 contracts from the 29th of August to basically September 11th, as you can see here. And this to me is potentially an indication that this is certainly an overdone condition. If we analyze basically the position in the silver market, we can take a look the same aberrations that has taken place and in the gold market as well with regards to the volume and the open interest. I want to take a look at gold here for a minute, and then let's take a look at the daily action here. Basically from that same period, which is about the 29th of August, and we can see here the open interest pretty much went to record levels of approximately what looks to be about 2,500 contracts that went short at this level here from 1283 to about 1228, which is the low that was made yesterday. 1226.30 is the low on December gold, and that was made on the 15th of September. So the market, needless to say, in the gold market has broken what appears to be a nearby support, and it's basically beginning to test the lower levels of support that we have been able to identify by using the BC price momentum indicator that you see here. These blue lines basically represent the levels of support, and the suggestion that the VC price momentum indicator is saying that these levels of 1228 to 1220 are levels that need to be purchased, and you can see here the market coming down to these levels here for a couple of days and then bouncing back above the green line, which is the VC code, the daily VC code, that is about 1233. With the market closing about 1236.50, which is above the 1233 code, it's an indication of potentially the market wants to move higher into these higher levels that we're looking at of about 1246 to 1241. We saw a high today of about 1236 and a half, so we're looking possibly to test some of these upper ranges, and if we do break out of these ranges, then we're looking at the possibility of much higher prices all the way up possibly to that 1300 level of resistance once again. Let's go back to Jnug, which is the focus of this podcast that I'm doing here, and I want to see if we can identify what really is going on with Jnug from a technical point of view. And as you can see here, it appears that very strongly we have made 1, 2, 3. We're on the making of the third bottom, which appears to be at the bottom end of the channel here. And so where are we going from here? If we use technical analysis and take a look especially at Jnug and see where we're going to go from here. One of the things that we use to identify basically the level of support here are trend lines. And by connecting the lows that we made back in December, the lows in June that we made this year, we have very clearly identified the bottom end of support, or the channel trend line level of support. By connecting the highs that we made up here into this 43 to 45 level, which is a level of resistance that identifies the upper end of the channel, we're looking at basically a channel that has been established in Jnug between the average of about 13 to 43 on the upper end. Excuse me. If we take a look at the short-term action in the market here, and if we draw a line here from the high that we made in March, we can clearly see the market today broke out above that trend line, which is very, very encouraging and confirmation that the short side of this market is in jeopardy. Now, we came down here twice, made a low on September the 9th and on September 11th in the neighborhood of about 1821, 1834, which could be a double bottom for Jnug at this point. Unless this level of support is violated, it increases the probability more that this, in fact, is a double bottom, and we're beginning on the short term, and we're beginning the triple bottom that has been established since December, since 1280 basically, which is the price that we made late in December. Before this rally ensued, and made a top sometime in March. So an indication basically that we are looking to head up here towards the 3138 level to test and see this level of resistance, where it can go if we are able to break above it or not. And in order to measure where we could be going to the upside in terms of objectives, let's see what the Fibonacci retracement is indicating for us. If we connect the recent highs that we made back in March to the recent lows, then we get an indication that the market could rally up to about 31.90. The 23.6% retracement is 20.74. The next target is 38.2, 23.71. And we come up to this level, which is about 30, that matches the level of resistance from the previous two highs made back in March and back in basically July, which defines for us the downtrend line resistance level. And so it appears that using this analysis, high probabilities are indicating that if we continue to build a bottom here, and if we draw a trend line from the recent low that we made, we're beginning to get an uptrend developing with the market closing above these levels of support. And so this is a very good signal that the market may be headed towards this level of resistance that's in the 31 to actually 36 on the upper end of the range. Let's use the high that we saw on the upper end of the range here and see what the Fibonacci projections can tell us by using the high that we made back in March to the low that we made in June, and we get a bigger picture, a clearer picture of the levels that we're going to experience some kind of resistance, and once that resistance is broken, basically then they become support. So the next level that we're looking to challenge and basically attack is the 2029. Closing about 2029, then we're looking at about 2463 and so on, up to the 78.6% retracement that points to about 3665 for Jnug. And closing about 3665, it points to about 43, which is the upper end of the channel, and confirms the upper end of the channel with the Fibonacci retracement as well. So where can we go from here? Let's say by identifying the Andrews pitchfork analysis. By integrating that, let's see where we can go. By connecting once again the highs made in June to the recent highs that we made in March, we get a sense that the market is beginning to establish an upflow movement of energy towards higher prices. It appears that we have come down to a major level of support, although if this is violated, we're looking at basically the lower levels, which is in the 14-15 area, as a maximum projection if we do break this level, this line of support. But in the meantime, the market is above this resistance. It's indicating a flow, an upflow, an uptrend flow, and it's telling us basically that we could rally once again up to this level up here, which is about the 34-35 level of resistance that matches the line of balance of Andrews pitchfork. So let's put back here the Fibonacci retracements once again and see how we can match the level that we could see some synergy come in to indicate for us that we have accomplished a major target. And that points to about 3650 if we use the current market action here since March. And obviously breaking above 3650 for Jnug, then we're looking at 43.02, which is the upper end of the target that we have seen the market approach back in October 27 of last year, and in March 14 of this year. And so I'm very encouraged by the fact that I think this move could be explosive as we move up into these resistance levels. Let's see if we can define a little clearer where those levels could be if we use Fibonacci fans once again from the high that we saw back in March to the recent lows, which is a completion of what appears to be this final leg in here that was completed since the beginning of September. And we get another indication and confirmation that the targets match in terms of reaching a level of about 22 in that vicinity. So the next level based on the Fibonacci fan lines of resistance is about 24.25, and the upper end of the resistance is about 26. Breaking above 26, then we're moving up into that 31 to 36 area, obviously, where it confirms the previous resistance level. So I believe that we are experiencing, once again, a strong level of support, and it's being confirmed by different trading tools that we use to be able to identify where the market is headed. Let's take a look for a minute here and see what the fan lines tell us in terms of resistance if we use the high that we made in March to basically the recent lows that were made early this month of September. And by the way, I said, I think much before on the analysis here, and this is July the 10th high. We're taking a look at the fan lines from basically March 14, and this tells us another very strong picture that the upper end of this resistance level is into that 31.32 area. So that 31.32 level is corresponding to the golden ratio of 61.8% Fibonacci retracement, with a very high probability that if we break above that, we can go up to as high as 78.6% retracement, which is the level that we came down to on this correction of this leg. And the fact that this low did not break the previous low of made in late May, early June, is a very good indication that we have made, again, what appears to be a triple bottom, or we're on the making of a major triple bottom. This is the first one here established on the later part of December. This is the second bottom established at the later part of May, early June, and we're on the making of the third bottom indication, which is was established between basically September 9th and the 11th. We will continue to update you on this on a frequent basis, as we feel that Jnug is offering truly an explosive profit potential. This is Patrick MontesDeOca with the Equity Management Academy. Until next time, take care and good trading.